All right, good morning. Buenos dias. How we doing, guys? The Trader Maker. I don't know if that's my favorite. Morning, morning. Guys, welcome to the room. Good to have you. Hope everybody's doing great today. Uh, Nice to see the market moving a little bit, right? After yesterday, holy smokes, the Trade Whisperer. Guys, welcome to the education room. Education being the key word in that. I don't call trades. I don't tell you when to enter. I don't tell you when to exit. What I will do, though, is I'll teach you to read your indicators. And when you present anything in my room, we'll talk about it. We'll look at the good, the bad. We'll look for ways to do things better. And if there's anything that I can do to be helpful, I promise that I will. But I will not call trades for you guys. This is a 100% educational room. First stop. Each and every morning, as always, forexfactory.com/calendar. I'll give you guys a link. And I do this because, guys, news can make things go wild. We just saw a huge spike in the S&P and the NASDAQ, guys, and that is somebody with more power and control than you making the market do things. And when news releases, they're more apt to do things. Fortunately, we don't have any high impact, not until tomorrow. 2 p.m., they're going to do the FOMC meeting minutes. But until then, it's just trade your patterns. And that's all it is. It's just patterns, guys. The market has a memory. That's the easiest way to put it. The market does the same thing every day. And the more time you spend in the market, the more you realize that this is true. One of the great things about day trading is you don't have to know what the market is going to do in order to find success in the market, guys. What you got to do is latch on to a pattern. And notice that I kept that singular. Just latch on to a pattern that you can prove wins more than it loses, a pattern that provides an edge, guys. That's what we do in the room. So we talk about a pattern that happens to be just a trend trade. So I'm going to hand you plans. There's going to be checklists. And we're going to focus on recognizing advantages on the chart. That's got to be the first goal. Because when you begin to recognize advantages, you begin to see opportunities, guys, and your advantages will become your trades. You will find that about 90% of the typical day is sitting around doing nothing, playing solitaire, high-fiving the dog, texting your wife, whatever. 10% of the day is active trading, recognizing what you need to get into the market and then capitalizing. You're going to understand through your reading some pretty cool concepts, where the market is likely to continue, where it's likely to go, and where it's likely to stop. And these concepts become ways to enter, to manage, and really to embrace that 90%. Disclaimer before we get any deeper, if you're new, it's okay to be new. Give yourself permission to not be $1 million trader in the first week. I do a lot of just like Google typing in, hey, why do traders fail? Or what's a challenge traders face? And one of the most common things is traders fail because they don't have a plan. Traders fail because they rely on their emotion and their guts to make good decisions. It's never worked for me. I don't know anybody that it's worked for. Maybe it'll work for you, but if you decide to not embrace the path that 94% of the failing traders follow, I just dropped in the room plans for both platforms, study sheets for both platforms, and even the PowerPoint that I use to teach for both platforms. But I want you to remember that the platforms are different, guys. They are apples and oranges. There's NinjaTrader. We've been teaching on NinjaTrader, I think, for the better part of 20 years, to be honest. And then there's TradingView, and that's relatively new in the Nexgen world. I spent an enormous amount of time studying TradingView, making that transition from NinjaTrader, and they are extremely similar. But there's just enough differences that you can't confuse the rules for the two. But regardless of the platform, this is what we're going to talk about for the first hour. We're going to talk about how to recognize a trend. We are going to patiently wait for a fight within the middle of that trend. And we're going to hope that it resumes as a trend trade. And that's it. And you're going to be able to pinpoint right where these fights are likely to be lost. And that's going to become your entry. And that is where the market is likely to continue in the direction of the trend. You're going to use key areas for targets. That's where the market is likely to go. And you're going to have this cool little thing that just says, hey, when I get where it's likely to go, I'm going to choose not to take the next trade into it. And it's the same on TradingView. First it's a trend, and then it's a fight, and then it's resumption. And guys, it's a predictable pattern. It is a recognizable pattern. It's a pattern that you're going to see a lot of people taking. An established trend. There's the fight. There's the resumption. And Jen, great job. We'll talk about it when we get deeper into the room. We start going after charts. But guys, that is what we're doing here. And when you take the time to learn the rules, not just what they say, and this is so important, not just what the words are, but what the look is that corresponds to those words. When you really learn the rules, when you embrace the rules, guys, you're giving yourself a trade that you'll be able to prove typically wins 70 to 80% of the time. You have the ability to simulate and to practice and to get feedback. And the step-by-step path to becoming a confident trader ASAP begins with you posting in my room. So those of you that are kind of new in here, Lucy 111, you need to be taking those pictures, right? Post. Tell me what you see, what you think. If you're struggling in your trading right now, guys, I'm going to tell you right now, the losers that you post give me the opportunity to give you a fix. If I'm looking at your smiling face in your avatar, but you're not posting in my room, guys, I just can't help you. Don't rely on videos and listening to get you where you want to be. Participation is going to take you next level. And then simplify. Can't stress that enough. The plans that I give you are called the KISS plan. The Keep It Simple Stupid plan. And we're not supposed to say stupid, right? That makes children cry. You're not children. Work through that. Keep it simple. Guys, this is a stepping stone in your learning journey. This is the foundation that you're building. This is the beginning, not the end. You have to write that down on a piece of paper and believe it. This plan is designed to teach you to read your indicators. And the trades that are in this plan are designed to optimize your chances of success, which means they have been studied, practiced, verified, proven to win more than they lose. And if you put that same effort into proving it, you're going to learn to trust it. And when you trust your plan, you don't hesitate. You don't have distracting thoughts. And that's the goal. You will craft your own plan. There's no doubt in my mind. I say that with confidence. You're going to come up with something that works for you, and it's going to be based on your experience reading the indicators. So embrace the plan, guys. Embrace simplicity. Trading doesn't have to be difficult. You can not only know exactly what it takes to get you in, but you can demand that the market give it to you rather than feeling like you're chasing money that never seems to land in your wallet. So simplicity pays dividends. You've got to learn the looks. That's it. It's only patterns. So I gave you spreadsheets for both as well. Those are dropped in the room, guys. There's over 450 pictures of the exact pattern that we're about to talk about. There's a place for you to put your pictures. There's even a place for you to track your trades. And here's the cool thing. Guys, the feedback that you get in this room every time you post, it's going to show you the reoccurring challenges that you have, but it's also going to show you the reoccurring victories. And you're going to be able to embrace and focus on the good while recognizing and choosing to avoid the bad. So when I talk about posting in the room and getting feedback, guys, you're going to put that feedback into the spreadsheet that I gave you. And here's your homework for every morning. Every morning, look at what you did yesterday and ask yourself what worked and what didn't work. And if you can't see it in the moment because you're brand new and excited to be trading, posting into the room, I'll see it because I'm sitting here and I have no stress when I look at your trades. When I open up Jen's chart, I don't worry about winning or losing. I don't worry about passing an evaluation or keeping my funded account going. All I do is I look and I say, hey, that is strong triggers, Jen. Great job. And yes, there's plenty of room to get to trouble, Jen. Outstanding. And your entry was at the mid band. But sometimes you step away and you get in just a little bit late. That's okay because where the market is likely to go is exactly where it went. What an awesome trade. And Jen's going to say, oh my gosh, that's the perfect trade. That's beautiful. Let me put that into my spreadsheet. Let me put the feedback that this was perfect, that it belongs in my plan, that I should never miss this trade because this is the highest probability trend trade that Nexgen teaches. Guys, you're going to get that. We're going to celebrate those victories. Good job, Jen. But it's the things that don't work. This is where we grow as traders. My particular thing was I traded in determination conditions as a brand new user when I first got the software. I was notorious for trading directly into lines that could stop the market. And it wasn't until I posted in the room and that I got feedback that John Novak says, dude, Mark, you got a problem here. And you know, being my brother, he could have very easily said, you suck, go cry to your mom. But he didn't. He said, hey, this is exactly how you're going to fix that problem. I want you to use this phrase. I want you to recognize this pattern. I want you to get into this. And what happens, guys, is I did do away with it, and I did become a more confident trader, and I was able to move forward and overcome that hurdle. But the feedback is where that comes from, and simplicity, guys. If you can't make money the easy way, how are you going to do it the hard way? So the easy way, we're going to start with NinjaTrader, is only 3 rules. When a rule is true, it creates an advantage or it identifies an advantage. The 3 rules come together to describe the pattern that creates a trade. And that pattern begins with momentum from rule number 1, and then nothing in the way from rule number 2. We just call it a clear path. And then defining that perfect entry where the market is most likely to continue from rule number 3. These 3 rules only need 2 charts. That's it. There's a large chart and a small chart. That's about as technical as my brain gets. I know the difference between big and little. My large chart's a slow chart. It's a very broad stroke of a brush, guys. It literally shows the overall opinion of the market. If an inanimate thing could have an opinion, it'll define the direction, letting you know which way you should be looking for your rules to be met. It will define the momentum, letting you know that rule number 1 is in play and that big chart's going to be hard to stop. And it'll define the areas that could in fact stop that market, keeping you from trading directly into something that could reverse the market. Your first 2 rules are met inside this one bar. So if I look at a large chart, the first printing bar will define direction, momentum, and areas. My first 2 rules will be met, and they'll be met before I ever go to my small chart. But when they're met, the market will be trading way down here, and my fear of missing out will just be going absolutely nuts. And that's where the small chart comes in. It's a refinement chart. Literally shows an X-ray of that one bar giving you all the goodness. You'll see the fight. That's going to be those up bars. That's a retracement. And a retracement isn't a trend changer. And a retracement doesn't remove the momentum. And a retracement doesn't affect the areas. This retracement is a small push counter to an underlying trend. We're going to pinpoint where that retracement is most likely to stop and bounce in the direction of the large chart. That's going to become your entry. And then that's what this tail is. That's the retracement right there. There's no predicting where it's going to stop on the big chart, so we use the refinement chart. And if this is one of those winners, you're also going to see continuation. You're going to see the market continue down, and all of this happens inside of that one bar. That's going to allow us to reduce risk. It's going to allow us to maximize profit potential, guys. And we use these 2 charts because it's all we need. But it's a great metaphor for who you're trading with or who you're trading against. The large chart is the big crowd, the large crowd, the men and women, the movers, the shakers, the go-getters, the money, I don't care, whatever you want to call them. But the large crowd typically wins. So your high probability trend trade methodology is designed to keep you in line with the large crowd, to trade with their trend, to utilize their momentum, to take advantage of the fact that they haven't reached an area yet. And when they say, this is what we're doing, this is where we're going, this is how fast we want to get there, we wait for the small crowd to fight, to create that little push. This is your small chart. That little insignificant shove against everything that the large crowd wants. Guys, when the rules are met for the trend trade, the large crowd tends to win about 70 to 80% of the time, which means that the small crowd loses typically 70 to 80% of the time, which means that if you can just learn those 3 rules on 2 charts, you can put yourself in a position to have the potential to win up to 70 to 80% of the time, all by getting in where the small crowd is most likely to fail. Now, both charts will have indicators. The first indicator that we'll discuss is a very generic term, areas. Areas are places of interest, if you will. Areas are horizontal lines on a chart. Areas are bouncy. Areas can create tops and bottoms, and areas can create bounces that become untradeable. Just horizontal lines. So you're going to see divergence highs and lows. These lines will form when there's a loss of momentum. So, for example, if the buyers are in control and the sellers tell them to get bent and steal their momentum, you'll see that magenta line. Same is true when the buyers take it away from the sellers. You'll see a cyan line. These are like lines in the sand that can create bounces. You're going to see Fibonacci resistance and Fibonacci support, singular lines built from tens of thousands of calculations in a pretty damn smart algorithm. You're going to see yellow one-to-ones, very exact, 100% Fibonacci alternates. And the way we're going to use these areas, if your market is trending up, any area reached, whether it's a divergence high, Fibonacci resistance, or yellow one-to-ones, we're going to blanket term it. We're going to say the market has reached resistance. Resistance is like a ceiling. And that ceiling will either have to be broken or it'll stop forward progress. Now, when we're in a downtrend, we could reach a divergence low. We could reach Fibonacci support. We could also reach those yellow one-to-ones. Anytime the market is trending down and reaches a line, we're going to say that that market has reached support. Support is like a floor. So the market either goes up or down, and the lines that it reaches are either resistance or support. There's no reason to concern yourself with anything other than it's a horizontal line. The other indicators we're going to use are trigger lines. And trigger lines do most of the work. We have small triggers. It takes 2 lines to create a small trigger, and it takes 2 dashed lines to create a large trigger. Small triggers are fast moving, large triggers are slow moving. When they're green, they're up. When they're red, they're down. Now we're going to use these trigger lines to define momentum in rule number 1 to make sure that the odds are favorable for that market to continue in the direction of the trend. We're going to make a comparison of these trigger lines up against those areas that can create bounces, and that's how you're going to define termination conditions, knowing when you shouldn't take that next trade directly into an area because the rules say don't. And we're also going to use these large triggers. They're going to be called synthetic triggers on your small chart, but these large triggers are going to show you right where your entry is coming from. It's going to show you precisely where that bouncy area needs to be to rocket the market back in the direction of all the momentum and the clear path. And we're going to do all of this wonderful stuff with only 3 rules. Now, your third rule is your entry rule. Your first 2 rules, guys, this is the 2. If you learn how to identify strong triggers, giving you the advantage of momentum, and if you learn how to avoid termination conditions, making sure that you have a clear path, this is the mental picture that I want you to get. This is Pete's picture. Momentum drives a market. It's hard to stop. And a clear path means that unless a water buffalo walks out in front of you, and it's probably not going to happen on your chart, you got nothing to hit for a long time. It's going to be hard to stop. So we're going to focus on the first 2. And I'm going to remind you guys that I'm very much a language nerd. So there's going to be verbiage that helps you identify. Remember I said you've got to get the correlation between what your eyes see and what it means to your brain. This verbiage is going to help you with that. And we're going to start with rule number 1 because it's rule number 1. Large chart, the big chart, the slow chart, the large crowd. They must have strong trigger lines. Now, strong trigger lines have nothing to do with areas, and strong trigger lines have nothing to do with price bars. It's literally right in the name. It's just the trigger lines. So in an uptrend, when the background on your large chart is green, strong triggers means that both of your trigger lines are green as well. The colors have to match or you don't have strong triggers. The small triggers must be up. They must be above the large triggers, and there needs to be space between the two. So our phrase for strong triggers is separation is strength, guys. Remember that phrase. Because when I have separation, when the colors match, the odds are favorable for the market to continue up. You're going to see on people's charts OFM. OFM is shorthand for odds favorable momentum. This is a market, look at the separation between the small and large. This is the market that I can say without hesitation is more likely to go down than up because of that strength. In an uptrend, Jen, I'm just going to use your picture all day long. In an uptrend or in a downtrend, the colors must match. The background is red, the smalls are red, the large are red. And it's when the smalls break below the large, when there is separation, because separation is strength, the odds are favorable for the market to continue down. So strong triggers means the market's going to be tough to stop in the direction of the trend. Strong triggers is what we're going to look to break key areas. Strong triggers is what you're going to have when you're buying Fibonacci support inside of triggers on a small chart or selling it on a large, those tails right back to the large triggers. Guys, rule number one is really rule number one for a reason. And if it's not met, if there is no separation, it's weak. It's the opposite of strong. Weakness. And the phrase I want you to remember is that anything can happen up or down, which I don't know. If I'm going to take a trade, if I'm going to try to make money, I want the odds to be favorable for that market to continue. I don't want to look at my chart and say, anything could happen. Looks like scissors that are open. Looks like scissors that are closed. So let's go look at a large chart. Bum, 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 bum. Separation is strength, and it pushes, and it breaks, and then it becomes weakness, and there's a big, ugly retracement, and then they continue up, and weakness right at a key Fibonacci area is where the market reversed, and down it goes. And guys, with all of this momentum, these are awesome, awesome looks. And I'm going to circle a tail here and there, and you're going to begin to see, when we talk about rule number 3, how accurate this methodology can be. When we go and we look at rule number 3, what I'm doing right now is I'm teaching you how to study this look when you've got strong triggers, when you've got a clear path. And we're going to go look at some of these and see if the market gave you some entries this morning. I already know the answer, but we're going to go check it out. Is everybody good with momentum? Has nothing to do with areas or bars, guys. It's just separation between the triggers. When you learn this advantage, you're halfway to establishing your core and your foundation. The second half is being able to identify a termination condition, being able to say, the market has reached a line. My rules say absolutely no more trades into that line. Guys, look at where the market stopped after that giant run up. The market has reached a line to the tick. My rules say absolutely no more trades into that line. That's what you're about to learn, guys. These lines on a large chart are where the large crowd is making decisions. It's where the buyers buy and where the sellers sell. It's where fights happen. So in order to define a termination condition, we're going to let price get to the line. The price bars reach these yellow 1-to-1s. And when they get there, I want you to ask in just some silly voice that makes your dog howl, where are my triggers? Because when price reaches an area, if 0 triggers, none of the triggers, and remember, 2 lines creates a trigger, not 1. If the triggers don't break, you have reached a termination condition. You've reached an area that can do one of 3 things. That area could break and the market could continue down. That area could also create what I call an untradeable bounce, which means that it pushes up maybe beyond all your good stuff and then continues down. And that's a very real possibility. Or the market may just reverse the market completely, or that termination may reverse the market completely, like it did here and here, and oh, I don't know, probably a couple other places somewhere up there. And if it does that, it creates what we call a strong top. And a strong top or a strong bottom, that would be a strong top, no triggers through, reverses the market. No triggers through, reverses the market. A strong top or bottom is the precursor. It's rule number one for the second trade on the KISS plan. So learn that. When no triggers get through and the market reverses, that's your strong top or bottom. The KISS plan says no trades directly into that area. You're more likely to lose than win. The edge is no longer present. Pump the brakes, you're in your 90%. If the area is going to break, after price hits it, remember, we don't need price anymore. Trigger lines are going to tell the story. If two triggers are through the area, it has a weaker potential to break. Trend trades taken are not on the KISS plan, but a lot of you guys are going to take them. They must be managed assertively. And there's a set of rules that are going to help you get the most out of these trades. That strong top is going to be the first thing. No divergence, no losses of momentum on your small chart is going to be a big factor. And then strong triggers, that same separation on both charts is going to utilize that momentum, hopefully to break that area for you. Again, this is not on the KISS plan. If you want to take that potential to break on the KISS plan, 3 out of the 4 trigger lines have to be through that area. This is your best look for a potential breakout. This is where the KISS plan says if you have a strong top and no divergence and strong triggers on the small chart, take a shot at this trade. The KISS plan is designed to optimize your chances of success. But the path is not clear until all 4 trigger lines break below the area. So all we're doing is counting triggers. And when all 4 triggers get below an area, that area of support begins to behave as resistance. The path is now clear, and your path remains clear all the way until you hit the next line. So no triggers, beautiful reversal. Weak triggers, anything could have happened, and it did. Right to resistance that creates a bounce. Right to support that creates a bounce. Guys, you're literally seeing the fight between the buyers and sellers. Weak triggers again. Weak triggers again. To the tick, right? Breaking through. All of resistance breaks, and look at that. They come back and tested a support to the tick. All the way to resistance up top. Creates the reversal, calling it a strong top. And it goes down to Fibonacci support where the triggers don't break. And there's your big, ugly, untradeable bounce all the way to resistance. And look at the reaction live right now coming off of an area that the triggers couldn't break. Pretty freaking amazing, right? If you're not awestruck, you're not paying attention. Learn this rule. It'll change your life. Price reaches, no triggers, no trade. Guys, that's your verbiage. Price reaches, no triggers through, no trade. This is the one that keeps you from trading into areas likely to stop the market. Memorize this list, guys. 2 triggers has the potential, but the number is still red because that's not your best look. That's not the highest probability. That's not a trade designed to optimize your chances of success. When 3 triggers break, now we're yellow. Caution. You can take a shot at this if you're following the KISS plan. There's a pretty awesome checklist to teach you how to enter, but it has to be managed assertively. It's still not a clear path. But when all 4 triggers get through that area, it is the promised land. And guys, the easiest trades that you will ever take, Jen, you are my model student today, will have odds favorable momentum and a clear path. And now all we have to do is go define right where that little fight is most likely to be lost. Is everybody good with that? Count triggers. Triggers tell the story. Yeah, Mark, we got it. Cool. I love that. So once separation is strength, I have the advantage of momentum. Once 4 triggers get through an area, I've got a clear path. I'm going to use some very specific language to define my entry, guys. Your entries are so specific, so accurate, so without gray. Guys, you're going to use a limit order. You're going to wait for the market to come to you. You're going to buy or sell a pullback. That's that fight that starts on the small chart with a reversal bar. You're going to do it at an area because areas are bouncy, fibs, midbands, and yellow 1-to-1s, and the areas have to be inside of those large triggers because they're going to show you where the area has to be. So one deep breath. I'm going to use a limit order to buy or sell a pullback at an area inside of triggers. And it's just a pattern. It's going to look the same. Every trend trade you take is going to start with a reversal bar that signifies a loss of momentum. It's the beginning of the pullback, but it's not your entry. And then you're going to say the market is likely to retrace to these large triggers. Large and synthetic, smooth and stepped. Guys, smooth is from the small chart, stepped is from the big chart. They work together to show you where the areas need to be. This is your retracement zone. It's the areas inside, fibs, midbands, and yellow 1-to-1s that are most likely to create a bounce and send the market rocketing in the direction of the large chart advantages. It's like the 7th reference to the perfect trend trade. And this is it. Once you can identify momentum, you can say out loud the market's going to be hard to stop. Once the path is clear, you can say, okay, it's hard to stop and there's nothing in the way to stop it. You're going to wait for the fight. You're going to pinpoint where it's most likely to be lost. If there's multiple areas inside of triggers, your job is to activate the limit order just above the highest, closest to the reversal bar. Because remember, the large chart is like, I don't know, 32 flavors of giddy up, right? We don't want to trip over a couple pennies to try to save a couple dollars. That's your entry pattern. By defining where the market is most likely to continue. Good morning, Sergio. You have also defined where the market should not go. The market, if this is going to be part of that 70 to 80, guys, if this is going to be a successful trade, the small crowd shouldn't be able to push to the other side of all the areas and the triggers. 4 to 5 ticks beyond those triggers, you will take a loser. 4 to 5 ticks beyond those triggers is where you're going to demand they come get you for that loser. Because as long as they're above areas or inside of those triggers, guys, rule number 3 has you in its loving embrace. The advantage is still there. And when it gets below, this is where we cut ties. This is where we say no more. This is where we accept the loss. And it's a cost of doing business. Absolutely no entries are taken from the wrong side of the triggers in the KISS plan. When the large chart says down, when the large chart has a clear path and momentum, the fight begins with a reversal bar. Defining where the fight is most likely to go happens with those large triggers. Understanding where the fight is most likely to be lost revolves around you identifying an area inside of triggers. Your job will be to activate a limit order just below it, taunt the small crowd, hope they come get you, understanding that if they blow through everything, you will accept that loser because anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. This is where the market should not go. This is the wrong side of the triggers. This is where initial stops will be placed. So you can study this one using those tails. Do you guys remember when it was like foreshadowing? I went back and I said, hey, there's those tails on the large chart when the rules are met. Pretty cool, right? Momentum and path. Let's see what they look like on a smaller, faster chart. Let's look at a market that I didn't cherry pick, that I didn't take pictures of 6 months ago trying to sell you guys on a methodology today. Our first circle, whoops, where are we at? There we go. Our first circle was a pullback directly to resistance inside of triggers. That's your pattern. Go back and circle these. Study that look. Write the words. Your second one was a pullback to areas right inside of triggers. Let's see what the third one looked like. Can we go 3 for 3 today? Holy shnikes, right to the area, right inside of the triggers. Guys, are there any questions about a high probability trend trade? Are there any questions? Look at that. About the pattern. Any questions about momentum? Any questions about path? All right, here is your loving warning from the guy who knows. If you don't learn these three concepts, you're probably going to struggle chasing money and not process. Take some time to learn strong triggers. I've given you over 50 pictures of exactly what it looks like. And these pictures are not just pictures. There's also annotations. Separation between the small and large. Looks like open scissors. Strong triggers. Rule 1 met. Odds favorable momentum. And I even added in wee, because holy smokes, it's going to be hard to stop. And then the same is true as up. Guys, if you burn this into your mind, you're never going to make the mistake of trading without momentum. You're never going to say, hey, these weak triggers might break things. You're going to be leaning on that first advantage. And then when you understand a clear path, once again, like 18 pictures, small and large below the 1-to-1s, the path is clear until I reach the next area. You're never going to trade into a line going, damn, why did I lose that trade directly into a line that could stop the market? And then you've got to define your entry. It's a pullback to an area inside of triggers. It's always a pullback to an area inside of triggers. If you don't have areas in your triggers, the rules aren't met. If you didn't have a pullback, the rules aren't met. If you didn't have momentum, the rules aren't met. If you don't have a clear path, the rules aren't met. So guys, in the very beginning, you can take all the pressure off of yourself by saying, I'm only looking for the perfect trade. I'm giving it 7 days of learning these rules, what they look like. 7 days, 5 trading days. Let's do that. Because when each indicator on every chart agrees with the rules for the trade, we call that a high probability trade. And then because you're learning to begin to speak in terms of advantages, you'll notice when one is gone. You'll look at your chart and you'll say, shit, I don't have momentum, but I can identify a clear path in an entry area, and then you can choose to take what's called a medium probability trade. And I'm going to tell you guys right now, this is going to be the majority of your trades. Most of your trades are probably going to have a little flaw in the slaw. You're going to take these and you're going to manage these. You're going to manage them assertively. You're going to use your chart reading to do that. So get good at your chart reading. And you can also look at your chart and say, dag nabbit, 2 out of 3 are gone. 66% of the good stuff. 2/3 of what I hold dear to my heart is missing from this trade. That's low probability. And a lot of you are still going to take that trade because you smoke hopium every time you trade. Guys, there will be a point when you trust the plan that you probably stop taking these trades, that you stop giving away money, hoping the market does something the indicator suggests that it may not. You're in control. This is the part that I forgot for a long time. I'm in control. I don't have to chase trades. I don't have to jump into trades. I don't have to break my rules because I'm not going to be able to find the actual trade, guys. I'm in control of the entry, and I demand that the market give me everything that I ask for in order for me to risk my money. When you know what's working for you and against you, it helps you make those decisions on entering. It also helps you understand how aggressively or assertively you need to manage it. And that's all based on only 3 advantages, guys. And as you grow with this software and this company, what you're going to find is that every trade you take, you can relate back to these 3 things. And you're going to see it when we start looking at the charts that are posted in the room. Are there any questions about NinjaTrader? Because we're about to go trading with you guys. And if you are in Nexgen Pro Trader funding, if you're trying to pass evaluations, if you're looking for consistency, if you're doing your best to stop blowing out every 3rd day, this may be a great resource for you because there's a lot of people in this room finding a metric shit ton of success with this very simple trend trade. That's a true term. Guys, it's a trend trade. It's only 3 rules deep. That's it. And it only takes 2 charts. I'm telling you, I'm not smart enough to make it any more complicated. You're going to have a 15-minute chart and you're going to have a 1-minute chart. Big chart, little chart. Large crowd, small crowd. Your 15-minute chart, I want you guys to think about how much you can accomplish in 15 minutes. Guys, this is huge. It's a glacier of a chart. It'll define direction, momentum, key targets, and terminations. It'll give you the big picture, the overall opinion of the market. I'm going to tell you from my experience that when I watch traders trade in the prop firm, and that's my job. I am the trade police after hours. Guys, fighting the large crowd, I watch 20, 30, 40 people at a time losing money in that thing, just going against the 15-minute triggers. The 1 minute, guys, this is your immediate strength. This is your giddy up in the market. This is where you're going to define entry points. And this is where you're going to look for the fight and the bounce to put you back in line with that 15-minute chart. So your 15-minute chart, unlike NinjaTrader, doesn't have colors. I don't need background colors. It's too slow. It just creates opinion. I don't even have large triggers. They're too slow. They create opinion. They're distracting. Guys, I have small triggers on the large chart. They're either up, cyan, it's a fancy way of saying blue, or they're down, white. It's a fancy way of saying there's no color in it. So up or down, small triggers on the large chart. You will have small and large on the small chart, guys. You guys want like the secret handshake? I'm gonna give it to you. If you're only taking trend trades, you don't even need those large triggers. True story. But there is a second trade on the plan called a momentum trade that is very dependent on that separation showing strength. But if you're just a trend trader, hell, you could get rid of the large triggers on that, guys. I'm a big fan of the fewest moving parts, the most focused approach to getting where I need to be. You will have areas on both charts. Areas are bouncy. Areas can stop markets. Areas can create ricochets. Areas can upset the apple cart. Guys, if you see a horizontal line on a chart, it can create a bounce. Believe it. Embrace it. Love it with all you have because it's designed to keep you safe. So trend trades. I love this trade. This is probably my favorite trade because it requires a little bit of patience. And if you follow the plan, guys, it's hard to break the rules. Your first rule is that your large chart, from wherever you take your entry, you have room to trouble. And I don't rank trouble, guys, and I don't say this is more important than that or these are more important than those. Guys, you've got to have room before you reach an area. That's room to profit targets. That's making sure that your amazing entry gives you room to produce. The second rule is really just kind of a copycat, very unoriginal. Now your 1 minute shouldn't be trading into areas either from wherever you're trading because areas are bouncy and they don't know if it's a big chart or a small chart. So your first two rules for a trend trade plead with you. Don't trade directly into areas. Why? Because trading directly into areas produces more losers than winners for you guys. The trade is designed to optimize your chances of success. And then rule number 3 just says wait for the fight. Buy or sell a pullback in an area because areas are bouncy. But there is a little trick I'm going to show you to not get caught up in that immediate momentum. So let's define trend first. If you are not good with up or down, send me a message privately. Don't admit that in front of a bunch of strangers, but we'll work together to get that concept down because that's all you need to define a trend. Your small triggers on the big chart are either up or they're down. There's this old saying that there's 3 things you can do in a market. You can buy, you can sell, and guys, the hardest thing you'll ever do, you can wait. If you can't tell if those small triggers are up or down, if they're caught in limbo, if it could go either way, and you're like, oh, I can't really figure out what the hell the large crowd wants, guys, it's okay to wait. It's okay to say, you know what, large crowd, get your poop in a group. Let's go up with a little conviction. Let's get 2 bars deep into it. Let's make sure those triggers are actually up or down before I risk my money. Just designed to optimize your chances of success. Rule number 1 says from wherever I take my entry, wherever that market is, I have to have room before I hit something. That's it. If I enter the market at 25,202.50, I have to have room before I reach something that could create a bounce. Because if I don't, my day could go like this. I thought it was going to break. It should have broken. I hoped it would go up further. Guys, wish in one hand, poop in the other. Tell me which one fills up first. So, room to targets. Same thing on the 1 minute. From wherever you take your amazing entry, make sure there's room to get paid. Make sure that there's nothing directly in the way. Make sure that there's nothing that could create a bounce. And the question people ask is, from my entry, how much room do I need? That's a you question. But I'm going to give you my 2 cents on it. There are people in this room that are very comfortable with $40 worth of room because they're so solid at their chart readings, they feel like they have time to react. I personally prefer at least 100 because I don't want to be in a $40 trade. It's just not even worth the mental capacity to me. There's too many opportunities out there. For the brand new user, 200 might be a good baseline because the adrenaline and the anxiety that a trade produces for the new people, it gives you a pretty good amount of time before you're forced into a reaction. So you'll have to figure your own out, but from wherever your entry's coming from, you're going to gauge that distance to the first closest area that could create a bounce. So we have to be able to define an entry. And I think this is relatively easy once you again learn the language. In this particular instance, my large chart is up, and there will be room to large chart trouble. And my small rules, Miss Lucy, don't be shy. Because the small triggers on my small chart roll down when my large chart is up, this lets me know that the fight is on. This lets me know that the small chart is in that retracement. The immediate momentum is pointing down. And you can draw a box around every area lower than where that market is right now. And you could say to yourself, price has to pull back to an area. But when it gets there, we're not just getting in with a limit order, not like Ninja Trader. There's a little trick to get you back on the good side of things, guys. So when price reaches an area, I'm waiting for a reversal bar up, and both corners of that bar must finish above the small triggers that have turned against me. That puts me in on the weak side of that immediate momentum. That is where the small chart is most likely to bounce and get back in line with that large chart. And from this entry is where I'm making sure that I've got room to the next trouble spot. And as you can see, it made it to the next trouble spot. And then it just crashed and burned. It's okay to get paid. When the large chart says down, when there's room to trouble on the large chart, I'm waiting for those triggers to roll. And once the small triggers roll up, I know that the fight is on. And I'm going to say I need it to pull to an area. I stripped a lot of areas for the entry lesson here. There's typically a lot more on a chart. And I can say to myself, until price reaches that area, there's nothing for me to do. And when it reaches that area, there's nothing for me to do except patiently wait for a close that finishes below the triggers. And guys, you'll have a timer on your 1 minute. You will literally count down 4, 3, 2, 1. Mash that sell button. That's your trend trade. That's where the small chart is most likely to continue with the large chart advantages. And yes, it's just a pattern. That's all it is. So when the smalls are up, so is my trend. When there's room to trouble, I can make money. And when my small triggers turn against me, the fight is on. And it doesn't matter that I'm in an area because I'm trading from down here. I will look for lower areas. I'll look for one-to-ones or mid bands or zones. And when they get there, it's that up bar that finishes above the small triggers that puts me into my trend trade, that catapults me in the direction of all the large shark goodness. And guys, from the triggers rolling, you had 1, 2, 3, 4, 5, 6, 7. You had 8 minutes. 8 minutes to make sure your rules were true. 8 minutes to make sure that you weren't fighting a trend. 8 minutes to make sure that you waited for the perfect entry. TradingView can be extremely stress-free because you've got to wait for that close. In a downtrend, when the triggers are down, when there's room to trouble, I'm going to wait for the small triggers to roll up. And when they do, I'm going to start circling areas above me. And I'm going to say, okay, get up here, small crowd. This is where the bounce is likely to happen. But I don't jump in at the area. I don't hope it goes down. I don't fudge my rules. I wait for that down bar that finishes below the triggers. And in this particular trade, we had 1, 2, 3, 4, 5, 6, 7 minutes to make sure that we were on the right side of history. And that's where the market continues down with the large chart. So guys, it's the same pattern. That's the S&P, that's the NASDAQ. And we're in that transition where you can't tell if they're up or down. Something just rocketed that market, didn't it? But this is a pretty good example. Those triggers were up. And there was room back to trouble. Well, there wasn't. From the possible entry, there was no room. But look how the market pulls back. And then when it closes above the small triggers, there's absolutely nowhere to go. Rule number 2 is not met. And look what the market did. So it's this conglomerate of the 3 rules that give you the perfect trade. A close above the triggers isn't enough. And it did. It went right to the trouble ahead of it. And it was actually 18 points. Someone might have caught that. But once it hit it, it was Downsville, population U. An area right in front of you caused that untradeable bounce. You got it, Pablo? Did you manage out at trouble? Show the picture. Pictures there it didn't happen. Good morning, Miss Cindy. Good morning. Nice to see your smiling face. So guys, that's it. It's just a pattern. When you learn to trust the pattern, life gets pretty amazing. When you learn to be patient, life gets pretty amazing. There's a lot of people in this room that chased a lot of trades for a long time until they eased in. And they tell me trading is so much easier now. I don't win every trade, but I know that I'm in the best trades. And guys, that's confidence inspiring. There's an old adage. I love the word adage. I don't know if I'm even using it right. But what they say, and they know, they talk, is that great traders manage their trades before they ever manage profit, guys. So on Ninja Trader, you're managing your trade by having momentum and a clear path and a perfect entry before you ever put a stop in place. And on Trading Rule, you're managing your trade by being with the trend and not trading into things and waiting for your entry. And you're giving yourself an advantage. And guys, that really is part of the management process. But your active management after entry, this is a way that you can go into every trade on TradingView with an idea of how you need to manage it. And all it is looking at your large chart. I'm going to use this picture. I think I'm going to replace that other one. You let direction be defined by the small triggers. You make sure that there's room. And then this is just a blown up of what's happening when direction and path is defined. And you can ask yourself, where is the current price, the highlighted price, the active price, the in the now price? Where is it in relationship to those small triggers that have defined my trend? And there's 3 options. There is the strong side, which is the left of the triggers. And that's where your 1-minute areas have a better chance of breaking. That's kind of where bigger moves come from. There's the right side of the triggers, which is the weak side of the triggers. This is where 1-minute areas are most likely to stop the market and create a big ugly bounce. Check it up. Triggers are up, weak side of the triggers, perfect entry, out at the first thing that could create a bounce from the weak side. Pablo, this is just a testament to how effective knowing what you're up against can be. You took 13 points, $260 in that tight little window. 21? Holy shit, Pablo. 21 points, $420 in that tight little window. Because you understood from the weak side it was better to get paid than hope. You didn't get lucky unless you don't know this. Unless you don't know from the weak side it's better to get paid in GTFO, but I think you do. But there's a reason, right? Reversals come from the weak side. If you're in transition, this is split profits makes sense, right? Get out at trouble. Get to break even. See if it wants to break. Because in a 1 minute bar or in a 15-minute bar, you can go from weak to transition to strong. But if you memorize this list, you're going to know exactly how you're going to want to manage that trade before you ever get into that trade. And guys, that's my first hour. It's the first hour at Pablo Rockstar, bud. It's the first hour every day. It is the same verbiage every day. It is the same entry rules every day. Repetition creates recognition. Now here's where I put the pressure on you guys. You now have rules. You have rules that you will be able to prove win more than they lose. That creates an edge, which means that it's more important to focus on the process that gives the advantages than it is to focus on the profits that are a result of the process. And what you'll find is that when you put the process first, the profits seem to follow. And if anyone in the room has had that experience beside me, feel free to put a hand up and let the new kids know. Everybody in the room has the ability to simulate and to practice and to post in the room. No one else has had that. I love it when you guys don't participate. It's okay. I'm going to work through it. Everybody can participate. Everybody can post in the room. Everybody can get feedback on every freaking trade they take, every chart read they have, every question that they have. If you don't do it, it's on you. It's not Nexgen's indicators that don't work. It's not a methodology that isn't effective. It's a lazy trader that doesn't want to do the work to find success. That's you. Don't be that person. Keep it simple. You have a plan with only 2 trades on it. You have a plan that has been designed to optimize your chances of success. The more you go outside of that plan, the less likely you are to find that success. You've got to learn your patterns. So in 2008, my brother wrote this for his clients. Nexgen will supply the software and the trading rules and the coaching that will increase your odds of winning more than losing. And after you choose Nexgen, it's up to you. Don't worry about how long. Remember that simulation is not trading. It's practicing the movements, guys. It's getting the reps in. It's learning the patterns so you don't have to think about the trading of your plan. That's your first goal. Your second goal is to simulate 25 of the same trade setups. So when you think you know the rules, go take it 25 times without deviation, without distracting thoughts or hesitation to act. And then write down using screencast or Snagit or snipping tool what you should have done better. Guys, give yourself that analysis and then post it in the room and we'll compare notes. Everyone's different. It'll take a different amount of time till you get to that point. The more you complete 25 of the exact same trades on simulation, posting charts for feedback in the room and following your plan without deviation, distracting thoughts, or hesitation to act, the closer you will be to becoming a profitable trader. You will not have to win all 25 trades. If you win 15 and lose 10, you should be a winning trader if you manage trades correctly. Each time you repeat the 25 trades, successfully win overall, you then take the chance to trade real money. This is where prop firms come in, guys. When you trade real money and you fail to follow your plan and you end up losing money, you're not a professional trader yet. Don't despair. Don't do a lot of financial damage. Go back. Take another 25 trades on the simulator. Most traders will return to the simulator several times. I think several is a gross understatement. This is expected and very common. You're not losing, you're learning. If you're posting in the room, you're learning. Becoming a great at any profession has a cost. Your cost will be small losing runs with live money. This is why prop firms are a good way to test your plan. Finally, you'll learn to follow your plan and make money most of the time, and then you can call yourself a professional, profitable trader. Typically, most traders achieve successful mindset, the ability to no longer have to think about trading the rules consciously. They never lose it. Guys, we provide the analysis, the rules, the coaching. You have the plan, you have the software. Only you will be responsible for becoming the profitable trader. I've given you the path of least resistance, and it's entirely on you now. I am here to help. Nexgen is here to help. I've never quit on anybody in my life. Guys, you've got to do your part. If you really want to be in that 4 to 5% that succeed, you've got to take pictures. You've got to post in this room. You've got to ask questions. And what you will find is that you'll probably end up where it is that you want to be. So there's my from the pulpit. Triggers are down. Absolutely no room to trouble from where we are. And if we just took a little pullback right here, there's not a lot of room to make money. Really don't have my rules met. On the S&P, all the momentum in the world, but price reached a blue line. None of the triggers broke. And look at the reaction coming off of that termination condition. Pretty cool, right? You knew about it, you saw it, it got there, and now it's trying to take your money if you were foolish enough to believe you could make it break. Uh-oh, that's my untitled workspace, which has nothing on it. Crude oil, only 2 triggers through. Divergence prints, second divergence prints. That's a deal breaker. That's a killer. That's a messer-upper of good things. So, guys, I'm going to go take 5 minutes and stretch my leg. Great job on the first hour. When we come back in the second hour, this is where we're going to look at all the great stuff that you guys have posted in the room so far. I do have a request. Hey, Alexandra, good to see you. If you post in my room, I know you said it on previous webinars. What are these numbers? It's okay, Lucy. I'll say it 1,000 times for you. 1,000 times, because sometimes you got to hear it 998 to make it stick. So those negative numbers mean that there was a loss of momentum right at that pivot, and it doesn't happen right in the moment. So the market went down and then it starts to push back up. Yeah, that's what we call divergence. Do you see that blue line that printed there? This is a line in the sand. This is literally where the sellers were in control, pushing that market down. The buyers told them to just no, not going to happen, can't do it. And your software runs calculations in the back that say, hey, there was a loss of momentum right at this key price, Miss Lucy. There was a loss of momentum that is so powerful that if the market comes back and tests it, it could stop the market cold. And let's see if we can find an example of that. It's a line in the sand, so powerful. It can just stop the market. And what you'll see is that the buyers were in control. And when this negative number prints and the line prints, the market's all the way down here. It takes a second to calculate. But when they retest it, let's see if we can find a good looking pivot stop out. When they retest that line, there's about the best example ever. See how it stops the market? And the way it works is it uses MACD BBs in the background, and it uses price action, and it does all this math for you so you know that there was a loss of momentum, and it gives you that beautiful line in the sand. So if price comes back to it, you know that it's an area maybe to take profits or not take the next trade into. Does that make sense? So it's called divergence. Anytime you see one of those lines, I just want you to think loss of momentum. That's it. Just say, oh, the market lost momentum right there. And I promise you, I will say the same stuff over and over. I've been saying the same thing for 6.5 years. Doesn't faze me. It took me about 1,000 times on every concept for it to really click. But I'm stubborn. So in trading view, when you present in the room, guys, talk about the direction of your small triggers. Let me know how you see the trend to make sure that you're seeing it correctly. Talk about where price is in relationship to those small triggers. And what this does is it lets me know that you're starting to think about momentum and how to manage. Tell me that you had room to trouble. You could even put in a dollar amount if you want, because you're going to go back and study these and you may reduce that dollar amount. And then use the language. Because the small triggers rolled up, I waited for a pullback to the area, but I didn't just jump in at the area. Entry was a close of the bar. And you'll notice on my chart that my entry is after the close. That there is no entry markings on the bar that closes because I wait for my timer to hit 0 and then I hit sell. And I had room to trouble. And sure enough, it made it right to trouble. So when you post in the room with TradingView, do me that favor. Tell me those things. And when you post on NinjaTrader, guys, point out the momentum. Tell me what you see. Let's make sure that you're reading your indicators correctly. Point out the path. Tell me, was it a termination? Did it only have potential? Because if you start thinking about that before you ever get off the large chart, you know that you may need to manage it a little more assertively if it's only potential. Talk about your entry. Sold an area and inside of triggers. There's the language. But I used a reversal bar because of divergence on the small chart because it was only the potential. And sure enough, down it goes. This is actually one of my trades. I always use a reversal bar on the NASDAQ. Not as necessary on crude oil or the S&P, but I don't fight the immediate momentum on the NASDAQ because I lose more than I win. So there's crude oil, big ugly termination, giant reaction coming off of it. There is the S&P, weak triggers, no areas inside of triggers, and sure enough, it's pushing lower from the wrong side of triggers. All you have to do is learn the patterns, guys. So I'm going to go stretch my legs and see what my dog's going nuts about. When I come back, we're going to click on every picture posted. Do me a favor. I ask a lot of favors, don't I? Don't be the trade police. I'm going to go back to momentum path and entry on everybody's. Some of you have told me I'm working on following the KISS plan, which means that I'm going to hold you accountable to the KISS plan. If you no longer want that accountability in a room full of people, you need to message me privately and let me know. I'm not saying you're a good or bad person or go into trader jail. We're just going to look at the advantages that create a trade and make sure that the chart reads are good. And I'm going to try to turn every chart into a lesson for my new people because you're all going the same place. You're starting from a core, from the rules, from the best of the best. And then everything else outside of those rules is nothing more than a chart read. It's not rules because you saw a second lower divergence unless you write it into your plan. It's not rules if you see a pivot stop out unless you write it into your plan. So these reads may become a part of your rules eventually, but they're not included in what I teach. This is you getting better through repetition and time. So I'm going to walk away. I stink at walking away, but here I go. I'll see you in 5 minutes, guys. Post them if you got them. All right, guys, here we go. Gonna get things going. I'm gonna click on all the pictures that have been presented so that we can get feedback on everything. And if you're new, I'm just gonna tell you right now, getting feedback isn't always fun, especially if you're accustomed to being the person with all the answers. But I can tell you from my experience that the feedback that you receive is going to really pay dividends long run when you start to recognize the stuff that's bringing you success and you begin to recognize the things that are keeping you from it. So if you're nervous, just tape up, play hurt. You said same trades. That's all right. We'll just click on everything and see what we can get here. All right, guys, here we go. Feedback time. Smalls are up, not quite above the area, not quite above the large. This is more of a continuation look, Joel. The market does pull right back to the areas, right at the triggers. Every indicator is up. It's pulling back to support. Joel says, I'm willing to take a shot at this one. I'll get $100 out of it just to make sure there's nothing wrong. And then I'll take the next one off at the fib if they decide to go. Awesome trade, Joel. If you are in here or listening, you're missing the mid band on your large chart. You're going to want to redo your indicators. All right, strong top. Termination reverses the market, creates momentum, breaks the terms, and Pete jumps the fudge in. Makes $100, gets out when it starts to slow down, lets it turn into another trend trade, and double dips and gets paid again. Nice trade, Pete. All momentum and path, guys. It's all momentum and path, leading the way. Miss Jen, weak top, all the momentum. You take a momentum style entry, which is nice. All that momentum, she lets it break the fib, snaps back to the fib, catches it on the way down. Beautiful momentum trade, holds it until the momentum is gone. Great job, Miss Jen. That's a good looking momentum trade. Weak bottom, mid band, not support, large triggers, not a full bar away. Pull back to the area inside of triggers. You catch it on the way up due to multiple areas, a big window, potential risk. Get paid. Get out when it's done. Momentum and path. And then, Jen, I wanted to ask you about this one. Are you in here? Because I read what you guys write. Here you said there were multiple areas, so you use the reversal bar. Here you said there was only one entry area. Did you notice, or maybe not notice in the moment, that all of these areas were still in triggers? Right on. Just wanted to make sure. It's about the same entry, and it's great getting paid management. I was just like, I read that and I was like, wait a minute. Like, she just took a trade and said that it was multiple. So this happens in the moment sometimes. It has nothing to do with your amazing trade. I just noticed it and thought I would ask. So, good stuff. I actually skipped this trade, Jen, because I didn't want to put that much risk on it. Oh, it was hidden in that big fib. Oh, it sure was, wasn't it? I see what you're saying there. It was hidden in that big fib. No, it's a great trade. You had momentum and a clear path. It went from the highest area. You literally followed all the rules. Nicely done. Triggers are up. Strong side. Room to trouble. Momentum bar. So it breaks above, comes back, and then you get stopped out. And Miss Jen, the challenge with this one is you're already in an extreme. You're already outside of the outer bands. Um, it's I love a good momentum trade in between areas, but you're kind of at the target. Does that make sense? Like it's already gone. Yeah. Maybe if it's set up right here to get there. I love it. You followed the rules beautifully. You really did. You followed the rules beautifully. It just didn't work. And that's one of the things that I've noticed is that very often the momentum trade's set up before a trend trade. You're going to avoid momentums. I don't take them. I love them. I teach them. There's something about my brain that doesn't click with them. Um, and I don't know what it is. It's my own personal hang up. But you executed it beautifully. Strong top, odds favorable momentum, no clear path. Looks like 2, maybe. Pulls right back to the midband. No divergence, strong triggers, 2 triggers through, strong top. Great stop placement. It did go to the higher area. Great trade. Nice trend trade. Medium probability trend trade, Pete. Great stop placement. Good job holding on to that one because it was beautiful. And then it continues down, and there's the exact same trade you took last time, didn't take it. And then it pulls back, and you wait for it to get below the fib, and sure enough, it goes down. So Pete, I would have you ask yourself, what's the difference between 2 triggers through, no divergence, strong triggers pull back to the midband, and 2 triggers through, no divergence, strong triggers pull back to the midband? And I mention it because it's the exact same look from the exact same strong top, but different entries. So was probably annotating. That's fair. And guys, this is one of the things that I'll point out, not because Pete did anything wrong, but when I see exact entry rules met twice, but I only see one entry, I like to ask, did you talk yourself out of it? Did you know, what happened? Because maybe there's a lesson in there, and there is no lesson. He was just annotating his last great trade, which is a great problem to have, isn't it? And then everything is going down, all the momentum. You get in on the jump in, and they print a fib right on you. Fortunately, all that momentum carries it down. Nicely done. Nicely done. Great trade, Pete. And then termination, full roll, everything says up. Ron jumps in with momentum on 2 charts and nothing in the way, and catches it all the way up to Fibonacci resistance. And guys, welcome to the Chili Dog. Price outside of the smalls, good flow, base hit. Base hits pay bills. You can build a living on $100 trades if they're the right trades. All right, Cav termination. Comes back, retests, heads down, 3 triggers through, almost broken, pulls back to the area inside of triggers, and you're out below. You take the close below and ride it all the way down. And remember, Cav, it's not the 34 midband that we're looking for entries. It's the areas inside of triggers on that smaller, faster chart. That smaller, faster chart removes the burden of waiting for it to pull back to larger areas. Great trade. Awesome exit. Awesome exit. I don't think I even run a large chart because I don't have any rules on my small chart to use a large chart midband for entry. If I'm going gap theory or something, I may just see if it hits it, but that's just me. Everything is up, nothing in the way. Started moving. We're going to just not even read that one. Jump the fudge in, get the fudge out. Maybe a little more sensitive on language on that one. Price hits a midband. Large triggers are a full bar away. It's the gap theory. You get in and you get out before the gap theory is closed. Chicken. Chicken. Bok, bok. Just kidding, Ron. Base hits, man, they pay bills. So guys, one of the patterns that he's recognizing here is if price accelerates away from those large triggers, hits an area, and those large triggers don't follow, price is likely to close that gap. Ron knows this, and he finds a way to capitalize. Great job. Both triggers below the fib. Not a rule though, right? So, no momentum, Cav. That's rule number one's not there. You do have a clear path, and you do have an area inside of triggers. Now, one of the things that I love about momentum is that momentum says the odds are favorable for the market to continue down. One of the other things that's very predictable about a lack of momentum is that market could certainly push lower. That market could certainly push higher. So let's turn that into the first part of the lesson. Without momentum on the large chart, the market is less likely to push. The second thing, Cav, is you have a fib right here. And it has already been there, and maybe you didn't see it because it was behind. So what you really have is no momentum, and you're right at a fib that the triggers haven't broken yet. Do you see it? And that may have snuck in on you because it just updated. But you can see it clearly on your small chart. And if you see it on your small chart, it belongs on the large chart as well. So technically there's no momentum, no clear path, and no surprise. But even if that fib didn't exist, Cav, here's one of the things that I like to think about. If I still want to break that rule and take this trade, right? When I pull back to this area, I don't just jump in because there's nothing pushing the market down. So what I'll do is I'll demand a reversal bar. Does that make sense? I will demand a reversal bar because there's not the momentum to push it down. And without that momentum, I'm only hoping that that area holds. And that's helped me a lot. You were in at 65, which means that you were in all the way up here, Cav, which is so far on the wrong 24. It says 54. Oh, it did get you 54. My goodness, that was fast. Whew. That was some angry up to show it all the way back here. You never had a chance even to put your stop in the right spot. Yeah, you got steamrolled for sure. But that's one of the things. So guys, I won't say don't take the trade. What I'll say is maybe without the momentum to push it, a reversal bar, it at least gets them thinking about going the direction you're hoping it goes. So, man, that was fast though, Cav. You can tell by the entries. And then Jen, we talked about this one 800 times. It's the perfect trend trade. Nicely done. And apparently you're not the only one that knows it because there's momentum and path and there's the pullback. And guys, look at that. Like a sniper, entered at the pullback to the mid-band. Pete literally sold the high tick with this methodology. And then that's just easy money. Great trade, Pete. I love that I've got someone in the UK and someone buried up to their butt in snow somewhere in the Northeast. Nobody even knows anymore. And they take the exact same trade with the exact same rules, with the exact same look because it works, because they know that it works. Momentum up, clear path, get above trouble, half off, out before things go south. Great job, Pete. Just momentum and path, guys. All right, Papa. Let's free up some cash. All right, let's see what we did. Triggers are down. Room to trouble. Small triggers roll up, so you wait for the pullback to resistance. Enter with the close below. Set profit target at the HVA. and you made great money. Papa, this is the perfect trend trade. I can't find anything wrong with it. In at 15, that's 15 points. That's a $300 trade. Trend trade long. Small triggers are up. There's room to trouble. There's the pullback to the area of support. There's the close above. And there you are making money. And then price pullback to support, didn't break support, closed price above small triggers, but inside support, should have entered. Waited for price to close outside of support zone, HVA printed, entered. Set stop loss at pivot low, profit target next zone, could have held bigger profits, use multiple contracts on splits. Absolutely. Papa, from the strong side of those triggers, that's where I'm taking half on multiple. If you're trading singles, dude, there is no problem getting paid. That's two perfect trend trades. And there it is in the moment, right? Down, room to trouble, pull back to the area. There's the close below. And it looks like it didn't work. Let me see. Price pulled back to resistance, close below the small triggers. And it just ultimately doesn't work. Yeah, it happens sometimes, right? Let's see if there's anything that we can do here. There it is. Do you see that outer band? Right at 10. Hold on. Right at 10. Your entry is directly into an outer band, which is an area that could create a bounce, and it did. This is why looking at your trades after the fact is such a good thing. Because, Papa, I didn't even notice it on the first look. Until I realized it was a loser, I wasn't even looking at the outer band. But yeah, you're right at it. And that's a little problematic, and it just got you. It just got you. But still, great looking entry. And 66% winners is a hell of a good way to start the day. Nice job, Papa. Then we saw this one. Triggers are up, pulls back to the area, in above trouble, out at trouble, super fast profits. Everything is up, room to trouble, pulls back to the area inside of triggers, and you got in above, nothing wrong with that, and out at trouble. Great job. They, Cav, that was your reprieve, right, for the steamroll. They gave it back to you. They're like, man, Cav's a good guy. Let's give him the perfect trade. And they did. And they even wanted to make sure that they got you. They came back for you one more time. Nicely done. Don't be the trade police, Boaz. He was damn near there, right? That's his entry, Boaz. Those smalls are breaking above. I don't know what they look like in a moment because the pullback could have sucked him back a little bit. He had momentum. He hadn't reached the one-to-ones. He had cleared the previous area. He had no divergence. He had strong triggers. He had the perfect area inside of triggers, and he chooses to get up on, I mean, Boaz, that's about as pretty as it gets. And because it's historical, I can only assume that there was a little bit of daylight between the small and large. Cav is the only one that knows. Did you skip this one, Boaz, because there was no momentum? Which may be why you know. Yeah, okay. But 2 out of 3, can't you take that and manage it? Medium probability. Everybody's different. Everybody's different. That's the beauty of trading. What my brother finds conservative, I find aggressive. But the chart reads are the same, right? And then if you expand, weak top over here, strong bottom over here, more likely to hit those one-to-ones than it is to turn around and grab that fib. And sure enough, it's exactly what it did. I would say that a literal fraction of your trades will be high probability trades, guys. If you take 10 trades today, 2 or 3 of them might fit high probability. 7 or 8 of them you're going to take and have to manage in some sort of capacity. One of the reasons why, if you're new, I encourage you guys to name your trades. There's a reason that I gave them names. Because when you name your trades, you know exactly what it takes to enter, right? And those are the advantages that get you in. Strong triggers, clear path, defined entry. And guys, you should have, if you have the KISS plan, you do, an exact plan on how you'll manage that great entry. And the management plan and the KISS plan, guys, this is the first. This is the stepping stone. This is the one that's designed to teach you to understand stop placement and learn how to get paid. You'll make your own. But if you name your trades, if I'm in a high probability trend trade, I know exactly what it takes to get me out. And if I'm in only a 50-50 trade, I know exactly what it takes to get me out. And if I'm in a momentum trade, I know exactly. In an HVA trade, I know exactly. And the more trades that you add to your lineup, the more management plans you're going to have, the more likely you are to maybe get a little confused and make mistakes. So every time I go into a trade, I talk about whether it's the perfect trade or whether it's not the perfect trade. All right, Miss Cindy, weak top, 50-50, 3 triggers through. Divergence kills the 50-50, right? So Miss Cindy, again, if you were hell-bent on taking this trade with divergence, couldn't you wait for a reversal bar? That's one of the things, guys. If it's not perfect, especially on the NASDAQ, if it's not perfect, I demand the reversal bar. And then once you finally get it, you're on the wrong side of everything. It's a good look on the large chart. It really is. NASDAQ can be. It's a different trading style. It really is. It's a very different trading style. One of the things I do, Miss Cindy, and this is just me, and you don't have to trade like me, is I demand a reversal bar. I won't enter the NASDAQ at an area. It overruns too much. So I'm willing to take the reversal bar when the conditions are right. Get paid, wait for the reversal bar, get paid. And for me, it works. For me, those reversal bars really do tend to help me out and keep me on the good side of things more often than they don't. And that was the one time I didn't today. Check it out, Miss Cindy. Everything was going up, strong trending, and I was like, you know what? I'm going to skip my reversal bar. And they absolutely handed my ass to me almost instantly. And then I said, well, okay, now I'll wait for the reversal bar. But that was $320 or whatever. I didn't need to lose. And that's my plan. That's my rules, not Nexgen rules. But for me, it serves me well on the NASDAQ. I find the NASDAQ to be a lot like gold, and there's the potential for overrun just entirely too much. Look at that. Strong top, full reversal, odds favorable, nothing in the way. Jump the fudge in and make that money. Nice trade, Pete. Nice trade. So one of the things that happens, oh no, I'm waiting for it, Sergio. I know exactly what I want. So if my rules, say I need a reversal bar to enter the trade here, I'll right click on my reversal bar marker and I'll put a buy stop in. And that way it assures that I have a reversal bar. Pretty cool, right? And if I never get it, I never take the trade. And obviously this wasn't the right trade. But yeah, that's exactly how I do it. Like I wait for it, buy stop. I know what my rules are. I know exactly what has to happen to get me in. That was not a real trade, guys. That was an example for education. Or a sell stop. Exactly. If I need a reversal bar on my large chart to go short, I can just put a sell stop in. And if I get it, I'll enter. And if I never get it, I don't take that loser. And Sergio, I'll tell you, there are times where I've had, um, like if I were going to go long, I've got my buy stop and I'm chasing it and I'm chasing it and I'm chasing it. And then suddenly my rules aren't met anymore. But I've moved a buy stop like here, let's see if we can do it here. Like I'm like, okay, my rules are still met. I like it. They closed the gap. I got momentum. Nope, not yet, not yet. Okay, I'll put it there. And I've got my line in the sand. Where will I cancel it? Well, if I get to the other side of these triggers, I don't want that buy stop there, right? And honestly, with two divergences, I don't want it there anyway. But I'm in control of that. They have to give me exactly what I want. And if they don't, I'm simply never in the trade. And I love having that power. I love having that power where the market can't force me to get in. The market can't head fake me. The market can't trick me into things. It either fits my rules or it doesn't. And since my rules are a reversal bar, if it doesn't happen, my rules are never met and I simply don't enter. Does that make sense, Sergio? And I'm not telling you to trade like me. I don't give trading advice. It just works for me on the NASDAQ. And one of the things on the client trades is you guys will see some NASDAQ stuff. Like if you're hell-bent on selling the entry or buying the entry, Sergio, the distance away from your entry to those small triggers has a lot to do with whether or not you have a fighting chance. But one of the things that happens with a market, and I'll drop this in here if you guys have questions about it, when you get a market that moves as fast as the NASDAQ does, and guys, if you've never traded the NASDAQ or even watched the NASDAQ, it's fast on Rinko. Sergio, do you ever find yourself getting excited from the movement? And you're like, oh, it's going. Here we go. I'm going to make so much money. And they're zinging and bouncing and banging. And you're like, yes, I'm going to make so much freaking money. And you start like getting ahead of your rules. I've done it. I've done it. Anytime I talk about something like that, guys, it's because I've done it, because I've been there. The NASDAQ is not easy to trade. If you don't know your rules 100%, the NASDAQ is not easy to trade. If you can't predict exactly where your entry needs to be 10 bars before it gets there, the NASDAQ is not easy to trade on Rinko charts, guys. Two triggers through, right? So Sergio, if I were going to take this one, whoops, no reversal bar, no entry, right? Two triggers through, divergence. If I felt like I had to be in that trade, Miss Cindy, do you see it? No reversal bar inside of those triggers. What a great way to avoid losers, wouldn't you agree? But the problem is we're afraid to miss the money. I don't want to miss the money, right? So I'll get in and hope. I'll get in at the mid band and put an enormous stop on there and just hope shit works out. You guys are better than that. This methodology is better than that, right? The accuracy is better than that. But look how fast this market is. And guys, this is a 13.2, not a 5.1. This is a 34.5. We had to up the levels like 3 times on both just to get it close to tradable. John's even doing some looking right now at a 55 to slow it down even more. No triggers through. No reason to go short. Why? Because that is the more likely option. Pretty cool, right? Odds favorable, only 2 triggers through. If it pulled back, nope, never did, that's where I may activate a limit order. Don't have any triggers through, not going. 2 triggers through, 2 divergences, not taking it. 3 triggers through, fib update, weak triggers, not taking it. That's it. That's how fast it happens. NASDAQ is crazy. 33rd bar downtrend, broke the term, clear path, momentum is weakening. Bad entry, smalls are inside the large. It does retrace. and you hold on to make a little money. Nice job. Nice job, Pete. But look at how quick that changes, right? Did you know that you guys aren't obligated to trade the NASDAQ because John Novak trades the NASDAQ? Momentum, 3 triggers through. Sergio, I clicked in the wrong spot. Not even time, right? Not even time, but that was perfect. That's how fast. Didn't even have time to activate a limit order. But it was the perfect trade. So now what happens? Now you're like, oh man, I missed it. They owe me money and I'm at a fib, and maybe I'll just go long because 8 fibs have to hold. And then they go down anyway, and you're like, oh, well, maybe I'll go short now. And then like, nope, we got another divergence. We want to go up. You're like, son of a gun, I don't have a clear path and I want to go down, and I missed this one, and now I've got regret, and they made it to that one and there's another divergence, and you're like, and before you know it, your account's gone. Am I the only one that's done that? So why do we do that to ourselves? Why do we trade markets that are untradeable for us? Why do we put ourselves in position to not be able to make good decisions? Because we're afraid that we won't get paid. We're afraid that we'll never find a dollar in the market. We're afraid that it's never going to give us the perfect setup. We're afraid that area is going to break this time, or that area is going to break this time, or that area is going to break this time, or that those weak triggers will push a market. Because, guys, how many times in your lifetime has the market stopped moving? Other than crude about 6 years ago when it zeroed out. Has it ever happened? I agree, Boaz. I like pre-market NASDAQ. I like after lunch NASDAQ. So without momentum to push the market down, right? After a termination in a clearly channeling market, does it make sense to try the medium probability trend trade? 2 triggers through, divergence. So, again, no time to wait for a reversal bar, huh? So what do? When the market opens, I come to the S&P. It's a little more mellow. It's a little easier to follow, right? Or guys, I'm telling you right now, a minute is a minute is a minute. TradingView makes the NASDAQ tradable for everybody, even if you're brand new. Makes the S&P tradable for everybody. Triggers are down. Not a lot of room to trouble. Yeah, Phil, that is probably really, really smart. It's wild how when you're waiting for advantages, it seems like they will never happen until they do. And Phil, do you remember being new? When they did finally happen, you just second guessed them all and missed the trade anyway? That was me. That was me. I finally get my rules met, and then I talk myself out of it because I'm afraid to lose, or maybe I don't understand a concept. Triggers are down. There is 98 to 93. There's $500 worth of profit potential. If this bar closes below, I'm coming off of resistance. If it goes much higher, this is no longer resistance and support. And now I'm above 1-to-1s, which means that I don't have room if I take an entry from right here. Triggers are down, room to trouble, 87. Pull back to an area. Pull back to purple 1-to-1s, pull back to resistance, right? But if I get in below the triggers, I'm right into trouble. Right into trouble on the small chart. Or on the big chart. That's rule number 1 not met. Guys, when you know your rules, you'll know exactly what you need before it happens. And then it's just waiting to see if it happens. The hardest thing you'll ever do is absolutely nothing. The most difficult part about trading is sitting on your hands when the rules aren't met. Cav, have a good one, man. Nice trading today. You definitely went a lot more mellow today. A little more focused today, it looked like. So take the victory. Time to go skiing. That's a good day. Pete, have fun, man. Be careful. Have fun. Be careful. I'm jealous. I had a buddy of mine send me a picture from Tahoe the other day. He's like, I don't know why you didn't fly out and join me. Like, 'cause you didn't invite me, jerk. Because I was golfing in a pair of shorts and wasn't cold, which is good. Getting dumped in Tahoe? Yeah. It was clear the day he took the picture. He took his kid out there, his 8-year-old. He's teaching him how to ski. Having a good time with it. All right, here's where I ask. Brace yourselves, guys. Brace yourselves. Who has a question? Who's learning to read the indicators and doesn't understand a concept? Who's trying to get good at this but isn't yet? Look at this. Odds favorable. Clear path. If I get a reversal bar right now, oh no, no more areas inside of triggers, rules not met. That's how quick it can happen. That's how quick it can happen. Look at the NASDAQ. Woo! Strong trending. There's your area inside. I don't even have it set up on simulator, do I? We get the reversal bar. There it is. But there's no momentum, really. It's just a strong trending market, losing momentum. Crude oil, termination for the win, isn't it? How can I get this shadow? What shadow? Oh, there we go. Okay, so what that is, Miss Lucy, I'm assuming it's Miss Lucy. If it's not, I apologize. That is an indicator. It's not a free indicator. It is a company called Chart Prime. And they create these areas of support and resistance. So I know that you're relatively new. So Nexgen has been teaching Fibonacci for the last 30 years. And one of the things that can't be programmed into TradingView is Fibonacci, the way John does it. Yeah, but I'm giving you a little history and some whys. I talk too much sometimes, especially when we've got an hour and 15 minutes to kill. So because the programmers couldn't figure out how to get our algorithm onto TradingView, John Novak and I started looking for areas of supply and demand, which are similar to Fibonacci, but a little bit different, but it's still based on price action. And we came across a lot of them. We came across free ones and not free ones. And Chart Prime offers these areas, and you can see how effective they are. It's about $50 a month. And I realize you're probably in the evaluation stage, and not everybody wants to pay for an evaluation. They do offer a 7-day demo, but there is also a free version that's pretty freaking good. And it's that Algo Alpha. And let me get you the Chart Prime link if you want to check it out. And I'm almost positive they do a demo. Yeah, they do a demo for 7 days. So if you're evaluating the software, if you're on a demo, you could actually run those Chart Prime indicators for the 7 days as well. There's the link to it. But that's what that is. That is supply and demand. They will behave as support and resistance. I hope that was helpful. I put the picture just above you. Dynamic supply and demand zones, Algo Alpha. So if you go to TradingView and you go to indicators and you search, just start typing it in, dynamic supply and demand, and it'll probably give you a pretty good list. But Algo Alpha is the one that we found that's pretty solid. I just want you guys to do well. So, um, being a day trader, there's an investment in tools sometimes, whether it is software, education. Fortunately, education's free. You get the indicators. You can hang out here as long as you want. I got people that have been here for 10 years. John used to always say, if you can find something better, let him know, he'll buy it. I don't disagree with that. 2009 is when you started, RJ? 2009. That's amazing. 17 years. You were at one of, we may have met. I have worked at least one seminar and been at the party, one of the first workshops. So RJ, nothing's really changed, has it? And I think that's what's pretty cool, is nothing has really changed. It's still momentum. It's still path. It's define your entry. You're still on the T3, right? Where shouldn't the market go if this is going to be a winner? Below those triggers, $100 target, $200 target, still using the MACD. One of the things that I like, because RJ, I wasn't good at the comparison on the MACDs, is that John automated it with the divergences. So if you brought up MACDs, which is pretty cool, let me do it on a market that is easier to reload faster. If you brought MACD BBs up over here, that's pretty cool. RJ, you are old school. Siva still uses them too. Oops, I forgot to double click. There we go, apply that. So you get those MACDs over here. Oh, these don't have the BBs. And you start comparing, right? That's a lower low, that's a higher high momentum. That's what creates the divergence. And Nexgen users used to have to do all that math themselves. And what's cool is John just automated the process. So it'll show you that line. That's awesome though. 2020. That's when you bought the, or 2019, 16 years. I got to do something for you. Hold on. What brings you back? You just hanging out saying hi? I love it. What a testament that people are still using the Nexgen software 16 years later, 17 years later. I'm trying to find you over here. Sorry guys, I can't see the chat box for just a second. Hanging out. Oh man, you know, there's a few people that do that. They're like, I just need some background noise. And I guess it might as well be stuff talking about rules and advantages. I'm trying to find you in the lineup here so I can give you your 15 years with us. There's like little name plaques that you can get. Wow, there's a lot of people. Here we go. So you've got the lifetime member. There we go. I just changed you to a 15-year. You can mute that. You can mute the background. There you go. Now you got your 15-year. I think it's amazing when you guys are here that long, and I'm not at all surprised. About when you were starting, I may have already. I took one run with John trying sales, not a salesman. Those triggers up. I love it. I love it. And look at that. They just kind of overran us and then decided to head back up. Sons of guns. Happens sometimes. Um, there's a reason we have people with us that long, though. So that's pretty cool. All right, guys, I'm going to take a break. If you have questions, post them. If you have charts, post them. If you don't have indicators yet, guys, get your demo. Learn how to read these things. Jump on the train. Drink the Kool-Aid, whatever you want to call it. Hey, Miss Lucy, are you in here? That's such a good example of how powerful those divergence lines are. Pretty cool, right? It's like the buyers were in control and the sellers said no. And when the buyers tried again, the sellers let them think they were going to have it and then just unleashed on them. And it's crazy how often that happens. And because you know about it before it gets there, it's just one more advantage that you put in the quiver. So I always love it when I see that stuff. It's pretty cool. All right, I'll be back in 5, guys. Go stretch your legs. All right, guys, here we go. Final hour. Lucy, I totally get that. It's like going to an interview with a list of questions and you don't look at the list and you forget to ask every one of the questions. I've done that. So write them out. And remember, if you need help beyond the classroom, all you have to do is send an email or a message. Most answers don't take too terribly long to get for you. So as you organize, we'll get you taken care of. Currently on the S&P, guys, the momentum is strong. It's only 2 triggers through, and they keep pushing, and now it's 3 triggers through, and almost 4 triggers through, and now we have the next termination, and we relax again, right? And now they're pushing, and it's not momentum, but it is 4 triggers through, and if you took a trade, it wouldn't be a high probability trend trade. And now there's no areas inside of triggers. So now not only is it weak, you can't even define an entry area, which means if you're following the KISS plan, there's nothing for you to do there. Same is true on the NASDAQ. Crude oil is like watching paint dry, isn't it? Whew, man, I don't know what happened to this market. They get sleepy. They have little bursts, and then they relax. Good thing our rules say don't trade directly into areas, huh? We'll get rid of crude oil. Bum, 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 bum. So the S&P is cranking up. There's nothing in the way, but the momentum isn't what we would call odds favorable. And there is no area inside of triggers. This is where experienced users will say, you know what? If price reaches Fibonacci support has the potential to stop the market. This would be one of those times where you could say, okay, if I get a reversal bar from an area that could create a bounce, maybe I'll give it a shot, right? But I don't have momentum. It is a strong trending market. I do have a clear path. I'm already on the wrong side of things. So I like it. Yeah, I try to post it every day. Sometimes, Alessandro, we have technical problems, but it's I like posting it. And usually there's some great lessons, and there's a lot of people that will come back, and if they got a lesson during the day, what they'll do is they'll go in and they'll fast forward and they'll say, okay, I'm going to revisit the lesson that I got today. I want you guys to see how the Ninja Trader methodology works, guys. If the perfect trade, if I'm always going back to the idea that I need momentum path and entry, you can see smalls inside of the large, no space. So my brain already says, hey, you Yahoo, you don't have momentum. And I do have a clear path, and I'm like, okay, 50-50, right? I've got half of my large chart advantages. I'm missing the other half. You know what? Let's let the small chart be a tiebreaker. And if I have areas inside of triggers, I'll take and manage. And you'll notice that there were no areas inside of triggers. And now I'm on the wrong side of everything. And this is where a lot of you will simply say, you know what? It may go up, it might go up, it could go up, but hell, why would I take a low probability trade, right? And now look how everything is changing. So that's one of the great things. If you just start from those core advantages, triggers are up, I've got room to trouble. What I really need is a pullback to an area, and if that doesn't happen, I'm not going to have an entry. And that is what? NASDAQ, and there's the S&P, triggers up, no room to go. I would need a deeper pullback to get to the next area, and this happens sometimes. Sometimes they run. But I think, go back to what Phil said, it's no fun waiting on your rules, or you feel like they're never going to happen until they do. And then when they do, good stuff. All right, guys, what do you want to talk about? Instead of just running my mouth incessantly, I'm probably just going to do the muted room and wait for the next question or chart to be posted. Still weak triggers, still a clear path, still no areas inside of triggers. Nothing to do for the new user, guys. Weak triggers is a clear path, no area inside of triggers. Nothing to do for the new user. Let's talk about some of the most damaging words in the trading language. Let's do that. Let's form a lesson. Are you ready? The most damaging words to traders. It should. It will. Rules not met. Hold on. I'm trying to accentuate my butt. But. Rules not met, but. Guys, that's a double T. Don't show your butt. It rarely works out for you. Ooh, look at that. It has to. All of these things are opinions. All of these things mean that you have already made the brilliant read that your rules weren't met, but now because you want that trade to work, you are imparting this language on it that makes you feel better about breaking your rules. As in, I mean, you'll notice it if you listen to yourself when you take a trade. You'll say things like, that mid band has to hold. It's a strong trending market. It didn't. This 1-to-1 should hold and the market should go back up. It shouldn't. I don't know what it did. It didn't, did it? Well, for a second, and then it went up, and then it went down. But this is where language, I believe, becomes very important in what you do. And if you listen to yourself saying things and you catch yourself saying these words, chances are you're not actually following your plan. Chances are you're fudging your rules a little bit, because it's a weak top, right? It has to go back up. Because it's two divergences, it has to go back down. I'll take that short because it has to go to the midband. And if you just get in this groove where you're like, my indicators now say that I have momentum. My indicators say that those pink 1-to-1s almost have the potential to break, but not quite. My rules say because of this divergence and a termination, I don't enter at the midband. And there is no but, should, has to, or will. It's simply, what do my rules say? And my rules say I don't have a trade here. So that's kind of like goals, right? That's trading goals for most of us, is to be so in love with our rules that we can't stand the thought of breaking them. And we still will because we're yahoos, right? And now it's a clear path and momentum. And now they're just on the wrong side. As it comes down, the midband may meet it if it comes down. But look at how much this market moves, right? The next one's coming. It's always coming. My area's on the wrong side of the triggers. Even with momentum and a clear path, my area's on the wrong side of the triggers. Need that midband up there. It's trying, but now I'm losing momentum. This is just live chart read, guys. This is me waiting for a trade. No separation, no strength, no area inside of the triggers. I wonder if they'll push lower. Now they're on the wrong side of the triggers, right? And they're struggling. We'll see what they do. I never know what they're going to do. I just know that my rules weren't met. And if my rules aren't met, I'm perfectly content not being in a trade. Oh, I thought I was going to win that one. It was supposed to go up. Over and over. Repeating rules over and over until they're finally met. All right, guys. Here we go. Here's a good one to share. Reminder, since there's a lot of new people, guys, no team member or moderator will ever reach out through direct messaging and Discord. Be aware of scams and staff impersonation. Please report them to staff member if you encounter one or have questions or concerns. Message tech support, get a ticket going. Guys, if somebody sends you a message, they'll always start it off with, hey Lucy, how you doing? I'm just checking in to see how your trading's going. And it'll look like it's me or my brother or my nephew or somebody that works for the company. And that will progress in. If they hook you into a conversation, then they're going to say, hey, you know, we're doing this thing now that if you send me 6,000 crypto, we'll just trade for you and we'll give you 90% of the profits. And you're like, oh my gosh, this is Nexgen software services. Hell yeah, I want them to trade for me. And then your 6,000 disappears. And I wish that it didn't happen to people, but it has happened so much that the scammers aren't going anywhere. And there's a lot of people that have lost a lot of money to these people. Boy, they wanted it to go up, didn't they? So watch out for scams, guys. All right, I'm going to mute for a minute. We'll just watch the NASDAQ because it moves the most. And then if you have a question, post it. All right, YouTube, you guys lose. Sorry I sniffed in your ear.